Hey everyone, Ryan here, back with another market preview on the futures index markets. I'll be giving you my outlook this week on the S&P 500 and Nasdaq index. Before we get started, let me remind you that I am not a licensed financial advisor and I don't give out any financial advice. This video is for entertainment purposes only. These are my personal opinions. Please do not take a trade off of anything that I have to say. Okay, so with that out of the way, let's get started. In front of you, we have the dollar index. Last week's video, I mentioned this fair value gap on the monthly. We've been trading through it all of this year. No bodies have closed within this fair value gap. We see that it went through a few times. July, we went down really low, sweeping below the low in April and in February. Then we came back up and we closed above this fair value gap. So I do expect this monthly fair value gap to provide support. And then I want to see price go up to this imbalance back in November of 2022. So my outlook is for price to reach up into this area. So let's go into the weekly chart and let's take a look in more detail. Okay, here we are on the weekly chart. Remember, this green area is that monthly BISI that we talked about, and then we're going to be looking for price to draw into the red area, which is that monthly SIBI. First thing I want to do is I want to actually take this and refine it down on the weekly chart so that we have just the exposed area of that fair value gap label. So I do want to see price go up specifically into this exposed area of the fair value gap. So, but that's going to be a long ways away. Right now, I just want to focus on the last few months of price action here. So let's zoom in a little bit more. And the first thing you'll notice is I mark out this old weekly SIBI. That's going to be from this candle's low to this candle's high. There's a little bit of imbalance here. We've wicked through it a couple of times, but no bodies have closed. So I'm just marking it out. I don't expect price to stop here, but this could in the future act like a speed bump where it will make price retrace a little bit down and then come back up later. Ultimately, I do want to see price reach up for this swing high to take out the liquidity above here. Price went down into that monthly buy side imbalance, sell side inefficiency, came back up, went through this weekly SIBI, and then price now is within this weekly SIBI. And I've marked out the halfway point with a purple line. So we can see that last week, the body of the candle stayed above this purple line. So I want to be very careful in watching what price does while it's in this weekly sell side balance. Ideally, I want to see price only stay in the upper half of this weekly SIBI. I don't want to see price go down very much or even at all, ideally. Just stay above the upper half. That's what I want to see. And then I want to see price reach up here to this old weekly SIBI. Could have some retracement, and then I want it to bust through and take out the highs above here. Let's go down to daily for a little bit more detail. Okay, and then let's zoom in. Okay, so first thing you'll see is we have these relative highs. So I do want to see price reach up to take liquidity above the highs here, and then also go up here if it can go further above the swing high here that we mentioned on the weekly. So this is that old weekly SIBI that I marked out that could act as a speed bump. We can see that price traded away from the monthly fair value gap into the daily fair value gap here, and then came back down into the weekly fair value gap denoted by the two red lines. Now, if you watched my video from last week, okay, price was trading on this candle at the time, and I had mentioned that I was expecting price to go up into the daily SIBI here. Then I'm thinking, okay, price could come back down to retest the weekly SIBI, and that's pretty much exactly what it did. So far my prediction is coming true. Let's see if price can continue, like I said, to go from here, bust through without much resistance through this daily fair value gap, and reach for the relative highs here. Now, if it does come up here to the weekly SIBI, like I mentioned, this could provide some retracement. If it does, I want to see the weekly SIBI here provide support, not let price go below here and then push up, reaching for the weekly relative highs here and for higher target above the swing high here. Okay, we've jumped into the weekly chart for S&P 500. The first thing you'll notice is we have a big gap right here on the weekly chart. This is a volume imbalance, well, technically a void. There was hardly any trading done within this point. Price went down, came back into it, and worked in this area pretty well. Price started going down, consolidated some, came back up a second time to this gap. And this time you notice that it only went up as far as halfway. Wasn't strong enough to get up all the way through. So I don't expect price to get much higher. I don't expect these highs to get taken out. I want to see this gap act as strong resistance. And since we're bullish on the dollar index, the relationship to the indices is inverse. So we're going to have a preferred bearish outlook. Looking at lower targets, I see this fair value gap here. I'm just going to zoom in a little bit so you can see it clearer. So I have this marked out as an imbalance here. This is where I am looking for price to get to. Now between here and where price is currently at, we do have some small pockets of imbalances here, but I'm not marking these out. Just want to keep in mind that these could be retracement areas for price, but ultimately I am looking for price to reach for this imbalance here. And if we put our fib down from this low point to this high, you notice that this is pretty much at equilibrium. In fact, if you just move these to just the bodies of the candles, you can see that this imbalance lay right on top of the equilibrium level. So this is definitely somewhere I want to see price go to, and we'll call this 4305 and 3/4. So 4305 from essentially 4500, that's practically 200 points that you can potentially capture. So currently right now price is going away from that weekly gap. It's in a weekly BISI. Closed right into it last week. Let's take a closer look in detail to see if we can draw any more conclusions. Okay, so we see price for the last couple of weeks, we consolidated in the weekly gap, then price moved sharply away from it, creating a daily fair value gap here. Traded into the weekly BISI. On Friday, price went up back into the daily SIBI that it created, and you'll notice that these two candles here, the order block, provided resistance along with fair value gap here, both providing resistance, and price ultimately closed back inside the weekly fair value gap. So it already came up here and worked in this area a bit. I want to see this remain strong resistance. I don't want to see price break through here. I want this to be intact. Ideally, not trade back into it again. Instead, I want to see price come down rather into the daily fair value gap here. Like the dollar index, this could provide a speed bump. So something like price coming down to the BISI here, then going back up, using the weekly fair value gap as resistance. And then I want to see no support by this gap and go down below this swing low here. So once it goes below this swing low, we will officially have a market structure shift on the weekly, and that will further increase my bearishness to look for lower targets. So below this swing, we have sell side liquidity. Below this swing, we have sell side liquidity, and then we have that imbalance close to equilibrium. This is where I want price to ultimately reach for. So you'll notice I've marked out these high points here. So somewhere in the middle of June, towards the end of, excuse me, the middle of July, towards the end of July, I marked out this. You can see that ES has made a higher high from the middle of July to the end of July. Now, for a symmetrical market, we expect the dollar index to have a low somewhere in the middle of July and then a lower low. Let's go back to the dollar index. Okay, you notice that in the dollar index, somewhere in the middle of July, we did have a low, but we didn't have a lower low. Instead, we had a higher low. So there's some S&T divergence between the dollar index and ES. They're not symmetrical. So because the dollar is stronger, we expect the indices to be weaker. The ES, though, doesn't show that here. At the same time, it made a higher high. What about Nasdaq? Well, if we take a look at the Nasdaq on the daily, we see that from the middle of July to the end of July, Nasdaq actually made a lower high. So this does fall in line with the dollar index. So because of the S&T divergence on the highs, we see dollar getting stronger. This confirms that our bearishness on the indices should be in the right direction. So that's why I have a bearish bias on the indices. So let's go ahead, let's start on the weekly chart on Nasdaq, and we'll look for bearish targets again. We see price pretty much just rallying all the way up, and it hasn't made that market structure shift yet. It has to go below the swing low in order to have a shift in the structure. But we can anticipate it because of the dollar index, because of the S&T divergence on the highs. We can anticipate that it will go through the lows here. And the first imbalance area I see is this one here. This is the first obvious one. I expect price to reach for this area. Let's go into the daily chart and I'll zoom in. Remember that this is where I expect price to reach for, this large green rectangle. But above it, I did draw out a couple lines from the swing lows. These are going to be the sell side liquidity. I would like to take partials. I would like to see, well, not see, but I anticipate price to retrace some after taking these swing lows. So for the past couple of weeks, we see price has consolidated. It went up to this gap here, but then repelled downwards, leaving another daily fair value gap. Similar to ES, price traded back up into the fair value gap here, and this order block has provided resistance, just like in ES. The difference is, remember this green rectangle here? This was the weekly fair value gap. Now on Nasdaq, price actually closed below this fair value gap. On ES, if you remember, let's go back to it. You can see that price closed within the weekly fair value gap. Well, this is expected because we do see that ES is stronger than Nasdaq, denoted by the two highs up here. Nasdaq was not able to make a higher high, so we see Nasdaq as the weaker of the two indices. So it closing below this fair value gap, this gives us more confirmation that we should be looking for bearish targets. Now, my only concern here is that we do have this rather large buy-side imbalance, sell-side inefficiency here that price is currently trading at. And the month of August typically is more of a consolidation. So I would be a little bit cautious here in being overzealous looking for long trends to the downside. It could just consolidate for most of August and then start moving in the next month. So even though I am bearish, I just want to be a little bit more cautious until we see a shift in market structure below here and until we see a sign of moving away from this buy side imbalance, sell side inefficiency to the downside. So currently right now, we're just keeping an eye out to how price will behave. But we do have S&T divergence. We do have it moving away from this inefficiency here. So we do have good signs to reach for lower targets. Okay, so that is my outlook for futures indices. If you like this type of content, please subscribe. Give me a thumbs up to help encourage me to make more of these videos for you. I'm going to have these out before Monday, London Open. Also click that notification bell so you will find out as soon as I have these uploaded and you can see my market analysis as soon as possible. Thank you again, and I'll see you next week.